investments are one of the better methods of diversification. Well, I think it's fair to define alts as anything that is not traditional investments, publicly traded stocks, publicly traded bonds. I would agree with that. So it's a really broad category. Can be commodities, can be things like gold, could be Bitcoin. So it is a really broad category, and that's a fair criticism. It's not terribly descriptive to say I have an allocation to alts because there's so many choices. Most portfolios that we see when they first come to Quorum are filled with traditional assets, traditional stocks, traditional bonds. And those play an important role in client portfolios. They are core assets. Every client should probably have a foundation of traditional stocks and traditional bonds. So we see them as playing an important role for diversification. There are some costs and considerations. One cost is that there may be more limited liquidity. 10 years ago, there was no liquidity. You're on this ride with private equity or commercial real estate funds where you're stuck. You're just in the fund and you're at the whims of the partnership. And if they distribute money, it might be 1 year, it might be 12 years. You never know. So it's very, very lumpy. The average individual investor doesn't like that lumpiness. So that has been corrected in recent years. These investments have also been democratized from the standpoint of tax reporting. So now they look and feel and smell just like any other security. 1099 tax reporting, it comes timely, it doesn't delay your taxes, it's not hard to account for. So many private investments, alternative investments now have reasonable tax reporting. There's still plenty out there that are K1s, but there are more options available to individual investors now than ever before in history to access alternative investments.